Bitcoin only happens on 10 days of the year where it pumps. People don't understand that for 99% or for the other 360 odd days, it either trades sideways or down. As a crypto native person, most people probably hate Trump. There was a crypto native thing he did that destroyed a lot of liquidity, which was launching Trump and Melania. Really, that was the last height of crypto. That was the end of memes. The president of the United States, guys, launched his own meme coin. You're not going to get any better than that. And ever since, the market's been in a bit of turmoil.
The USA has had way too much power. They've literally bullied every country into what they want and what they need. With something like Bitcoin, they can't just manipulate, print how they want to, trade wars, this, trade wars, that.
It doesn't matter if we talk about tariffs. It doesn't matter if we talk about interest rates. It doesn't matter if we talk about inflation. There's never been a more important time to just own assets, whether it's property, whether it's the index funds, whether it's crypto, Bitcoin, that I do expect to outperform all of those markets over the long run against something like the USD or the AUD that can be infinitely printed at the directive of our governments, and there's no way out of this.
Welcome to Crypto Coach Will, where we bridge the gap for everyday investors wanting to build real wealth in crypto. I'm Will Wright, the founder of Mining Store and Imperial Wealth, two of Australia's leading companies in the crypto space. For over a decade, I've helped everyday investors safely and securely set up in the cryptocurrency market so they can build long-term sustainable wealth. In this podcast, we break down the complexities of the cryptocurrency market, everything from investing, trading, DeFi, and even Bitcoin mining. Let's get into it. Economic conditions over the past 2 years have been some of the most volatile that we've seen. Yes, markets have grown, but at multiple points, it has genuinely felt like global economies were sitting on the edge of complete collapse. Every time we thought we were out of danger, something else pulled us straight back in. We've seen massive stimulus packages around the globe. We've seen declining inflation across major economies. Quantitative easing programs have been reactivated. Interest rates have gradually been shifting downwards, and we've seen increased liquidity through positive M2 growth. Equity markets have also continued to trend upwards. On one side of the economic spectrum, we've seen huge bullish catalysts. But on the flip side, we've faced enormous structural risk. Trump's trade wars, a rapidly accelerating US debt problem, the ongoing fragility of the Japanese yen carry trade, and major geopolitical tensions between Russia, Ukraine, as well as Iran and Israel. Each of these events has created moments where financial markets have genuinely come close to seizing up. So in this episode, Mitch and I are going to recap the major economic events of the past 2 years. We're going to break down where we believe the global economy stands today, and then dive into our 2026 outlook and predictions, so you know exactly what to look out for. By the end of this episode, you're going to have a clear understanding of the last 2 years of global economic turbulence. You're also going to have a simple, digestible framework to understand where things are up to right now. And as well, you're going to have a realistic roadmap for how the next 2 years may unfold. We're going to look at practical insights to position yourself to build real wealth rather than get caught on the wrong side of volatility. If you watch this entire episode, then you'll be significantly better informed than the average investor and far more prepared to make smart decisions in 2025 and 2026. Mitchell, welcome back to the studio, the $1 Million Hot Seat.
Yes, thank you very much.
Good to have you back. Look, I'm excited for today because something that we've been talking about a lot lately is just how much not only the cryptocurrency market changes, that's always been a case. Crypto's been volatile for a long time, but just in sense of the conditions that global economies, geopolitical tensions are at, particularly over the past 2-3 years, and then going into COVID as well. The position we're in now is really, really different to what we have been in the past. And what I want to do for our audience today is just in bite sizes, break down what has happened over the past 2 years, do a bit of a reflection and position where we're up to right now, and then look at what we're kind of looking at over the next 2 years. So look, I'm going to hand over to yourself, Mitchell. What are your thoughts on that so far?
Yeah. So I think the most important thing to realize as an investor in Bitcoin and the cryptocurrency market from price cycles to this cycle is the difference in macroeconomics, right? So in the entire infancy of Bitcoin from, let's call it 2008 post GFC to pretty much the top of last cycle, we were in a what we call quantitative easing regime where Globally, in Australia, in America, in Japan, in China, interest rates are at record lows post GFC. In this type of regime where the ease of borrowing money, so on and so forth, was very easy to do. And as a result, that's why cryptocurrency investing, stocks investing and stuff it was a fair bit easier because the path or the uncertainty that we'll get into didn't really exist. But the difference in this cycle is due to the large amount of stimulus printed in COVID, interest rates had to go up, and we actually entered the flip side of that regime, which was quantitative tightening. So interest rates went from record lows to record highs. So the easiest way to kind of explain this is, the cost of borrowing. And it relates to everything to do with interest rates, to you paying your mortgage. People, I know many people personally that were on flexible loan rates. So, they've gone from paying 0.25% to as high as 5.5% or whatever it was. And really the major impact or the major macroeconomic, point of all of this is inflation. And that is why macroeconomic and fiscal monetary policy changes to account for inflation. And we've got this really weird dynamic this last few years where interest rates have been high, but so has inflation to try and tackle that. So it's been really hard to invest or to at least have those liquidity conditions that allow investing to be risk on, because people haven't been able to afford groceries, pay their mortgage, whatever it is. So the last thing they're going to invest in is altcoins and cryptocurrency. So,
and if we tap on that, so like going back to that previous bull market, where you could just chuck your money on everything, interest rates were so low, it was a much easier environment for those reasons, right? In this market, how has that been different? Like how for yourself when you're looking at things, has it made you being a little bit more cautious? You have to be a bit more risk off.
Yeah, I think there's an element of that. I think probably this cycle, like we probably didn't know how much it was going to be impacted by this type of stuff because it had always just been the exact same in prior cycles, right? I think it's the kicker to why Bitcoin's been the outperformer of most assets in the cryptocurrency class, because it's seen as a hedge against inflation.
Yes.
It's seen against a hedge against all of this uncertainty. And as this cycle's unraveled, I feel like it's almost gone to the opposite now, where it's a high beta asset to the NASDAQ. But yeah, I guess that's kind of the difference. And like we can go into so much of the rabbit hole of this and the different dictating things of interest rates. But one thing as well, from quantitative tightening to quantitative easing, is how much money the government is putting into the system through shadow banking, through all these other things, which is what cryptocurrency and Bitcoin thrives on. In the last cycle with COVID stimulus, with quantitative easing, with low rates, there was so much M2 and liquidity getting thrust into the system that a lot of this was being pushed towards risk assets. Whereas this cycle, given interest rates have been high, policy from worldwide governments hasn't been accommodated for putting more liquidity into the system. These assets haven't gone up as much. Only those that been seen as a hedge against this uncertainty and against these high interest rates, such as gold, silver, and the index funds, they've outperformed everything. So,
yeah, and look, it's like a really weird one to reflect on the past 2 years in crypto, I find, because when you really think about Bitcoin's price, like it was at 17,000 and now it's at 90. So that is an astronomical increase. Yet, if you feel like your emotions over the past 2 years, it's felt like utter shit. Like at so many periods of time, it's just been sideways, or it's hitting this and then it's pushing back down to that. So
yeah, I think we've made that point a few times on a few of these podcasts, and I try to tell my clients a lot of it is Bitcoin only happens on 10 days of the year where it pumps. People don't understand that for 99% or for the other 360 odd days, it either trades sideways or down. And I think that's the hardest thing about being in this asset class and in Bitcoin is, from an outside perspective, you probably come into it thinking that like, it just goes up all the time and this volatility is this huge, up $20,000 down. It really isn't. A lot of the time it is just crabbing, and it is just, if we can talk about the last 2 weeks, I think it's just traded in between mainly 92 to 88,000, but it's felt like pretty roller coaster to me. Like, like we've attacked the yearly open, we failed to reclaim it, we've dumped a bit, we've then repumped, and then this structured bill gets passed, and then this rate cut happens, and it feels like it's a massive roller coaster, but in reality, it isn't. So you just got to be aware and keyed into those 10 days that does happen.
100%.
But most of the time, yeah, it's just like you said, these last 2 years have felt quite weird because it's like that 2 week post-election period. We might have gone from 70,000 to 95,000 in 5 days.
And I love you bring up the post-election because that's exactly where my brain's going now. The elephant in the room, or we call him the big blonde-headed buffoon in the room. We were kind of promised that Trump was going to carry the crypto market to these all-time highs, and everything was going to be like exactly what we were promised and waiting for, right? I think we were in Nashville at the Bitcoin conference, and he was talking about the drill, baby drill, and he was talking like all this. And look, upon reflection, some of that he has done, but the problem has been tariffs. Yeah. And he's shocking the market through it. So talk us through that and how you've navigated the bloody tariffs.
Yeah, I guess like as a crypto native person, most people probably hate Trump, despite him being overwhelmingly more positive. And you do see the jokes online that, damn, we wish we had Joe and Kamala back. But there was a crypto native thing he did that destroyed a lot of liquidity, which was launching Trump and Melania on his inauguration day in early January. And really that was the last height of crypto. So you can say those were the two destroyers of at least
the altcoin market, definitely.
Of the altcoin market. That was the end of memes from there. That was the pinnacle of memes. The president of the United States, guys, launched his own meme coin. You're not going to get any better than that. And ever since, the market's been in a bit of turmoil, but the main reason is what you said, is these tariffs that started to slowly get introduced in January, February, and really went into effect February, March, April. And that's where we made that 74K major low, which is the lowest price point of Bitcoin for this year. And I guess that's the importance of having a geopolitical and macroeconomic understanding when investing in Bitcoin and crypto at the moment is, these tariff trade deals have absolutely decimated the markets at times. It's not just crypto. If you go and look at the index funds of the S&P 500 in April, astronomical crash. And obviously it's recovered a lot better than crypto has. But yeah, these trade deals, it's really the easiest way to generalize them is it creates uncertainty. And when you're invested in an asset class that is risk on, that hates uncertainty.
Well, we do overall, we don't like uncertainty kind of long term, but it does create opportunities. Of course,
So once again, the April tariff lows was something we took huge opportunity on. A project that we've used as an example multiple times is Hyperliquid, and we bought Hyperliquid between $8 to $10 in December in the initial Trump run up. It went as high as $34, I think. So we had a 3-4x in a matter of weeks. Insane, and it was great to be in that. But then these tariffs happened, and it crashed all the way back down to $9. Rather than selling it at a loss or break even, and I don't believe in this project anymore. I don't believe in perp dexes, perpetual futures, the product or the utility. We use that as an opportunity to actually double our investment and double down on it and invest more. And then obviously Hyperliquid, it is back down to the $30-ish range now, but it went as high as $60. So as much as a 5x for us, just utilizing the fear and uncertainty that the trade tariffs created.
Yeah, 100%. And look, I think that's the most important message at this period of what I'm talking about, like the past 2 years. Yes, it has been harder. Yes, altcoins have been worse off. There's been some geopolitical, not as much as probably what I thought, given at the start of this cycle with Iran, Israel, Ukraine, and Russia. That settled a bit, but with so much uncertainty there's still opportunity, and that's what people or investors need to realize. You can't change the black swan events, you can't control them. That's why they're the black swan events. But having the conviction to recognize them for what they are and execute based on them. And probably my favorite, and one that we've covered before, was the link trade. With that October 11 downward spiral of Trump coming out and opening his big mouth about trade tariffs, finally that was the one that you go, okay, well, it happens, what a buying opportunity.
Yeah, for sure. I think that was like kind of that special double whammy where it was the prices were going lower because of the trade tariffing, and then there was obviously mechanical issues with market makers and Binance and so on and so forth. But yeah, it's really having a thorough understanding that if you have conviction that these coins will eventually go higher in better conditions, when the conditions are worse and they're offering a discount on these high conviction investments you want to be in, whether that be Bitcoin or altcoins, it's really seizing the day and the opportunity to as an investor, you have to put your emotions aside. And when you see them go red or you are down on an investment, it does suck. But remember why you're investing in it. Remember the utility that's there. And then understanding, these trade deals aren't tariffs aren't going to be there forever. Trade deals are going to be made. They have been made since. We're seeing heaps of that with China, NVIDIA chips recently.
Yep.
Which is hugely important to the AI industry and to the development of crypto and blockchain industry, which heavily utilizes AI now. But yeah, understanding that these will get resolved. At the end of the day, no matter what Trump does macroeconomically, he's number one, and he has said it 1,000 times about crypto. Who knows about? Well, I'm not a Trump supporter or anything, but one thing I do believe he does is he does what he says.
Yes.
A lot of the time.
It's transparent as a book.
Yeah. And like he's done that with stock markets. Like, look at them, right? They're at all-time highs, the highest they've ever been in history. He's done this in a year where he has introduced these tariffs, where interest rates have began to drop, but have hardly been dropped by a more democratic regime at the Fed. There's a lot of things that have probably pointed to assets going down, but he's been able to keep them elevated. So yeah, at the end of the day, I think there's no more important time to be invested in assets and using the opportunities that come up to invest in them.
So we've tapped on Trump. We've tapped on the interest rate market, state of economies. Is there anything else over the past 2 years that you want to tap onto?
In terms of macroeconomics, yeah, I think it's just tying back to kind of what I said then. As an analyst, I'll be honest, there's never been a harder time to try and interpret macroeconomics in this market, because one side of you is saying, oh, inflation's going up, they're going to raise rates, but the Feds are cutting rates because the labor market is so deteriorated and we're getting a period of stagflation in the United States. There's these tariff deals. There's just so much going on. And what I seem to come back to is that there's no more important time to just own assets. That's kind of the conclusion that I come to, that it doesn't matter if we talk about tariffs. It doesn't matter if we talk about interest rates. It doesn't matter if we talk about inflation, the labor market, whatever conclusion I come back to, it's usually always that there's never been a more important time, whether it's property, whether it's the index funds, whether it's crypto, Bitcoin, that I do expect to outperform all of those markets over the long run, whether it's gold, whether it's silver, all of these asset classes are going up over the long term. And it's because of the erosion of fiat currency. And really, it's a double-edged sword right now, where it just looks like they're going lower. The native currencies of most countries moving forward, particularly in the United States, which is what we focus on, they're going to cut their rates, right? They've already come out and said next year there's going to be more rate cuts. What this does is it devalues that native forex currency of that country, the USD in this case, which is the most widely used currency on earth. And that's the reason why we invest in Bitcoin, right? Because we have a thorough understanding that over the long run, like, you know, $100 in the USD in the 1920s is worth less than $1 now.
Yeah. I want to talk about that, because if I take myself back to when I started in crypto 10 years ago, it was a punt.
Yeah.
Like, I'm not going to lie.
Yeah.
You know, we were mining
speculation.
Bitcoin. It was absolute speculation.
Yeah.
Mining Bitcoin, even coming into, you know, the next bull market that came through, buying things like Polkadot, Atom. I'm not saying I fully understood the technology. You know, we did well on them.
Yeah.
But now more than ever, and I really do mean this, and it's true, my net wealth is in crypto because of exactly what you're saying. You know, if you were going to hold a currency, what would you hold? There's no currency, fiat currency out there that I feel safe in. USA's debt is through the roof. Yeah. Bigger than their GDP per year.
Yeah.
The interest repayment is bigger than their military spend.
Yeah.
You know, why would you be sitting in cash? It's the perfect thing you say that we've learned.
Yeah, and I think the kind of idea of us moving from speculators to really understanding the death of fiat currency was probably at the latter end of last cycle, where prior to that we were just punting on everything, but then it really became apparent to us through COVID and through the stimulus. You know, the statistics that come out of COVID in terms of stimulus, it was something like 80% of the USD total circulation was printed in COVID.
It's ridiculous.
And that's a 2-year period, right, of hundreds of years of this currency existing. And that's when it really became apparent to me that, and when you dive into it more, and, you know, I'm not trying to be a conspiracy theorist, this is all out in the open, is that our governments just accrue more and more debt. They print more and more native currency. And, you know, it's the joke about Bitcoin, right? Go and look at the tokenomics of Bitcoin versus fiat currency, and you'll figure out pretty quickly why people favor it as even as a currency, not even just as a hedge or an asset, but against something like the USD or the AUD that can be infinitely printed at the will of the Fed or of the Reserve Bank of Australia, I should say, in Australia, and at the directive of our governments. And there's no way out of this. You can't. No, we are a democracy, but we're never going to be able to change the tokenomics of the AUD, of the USD. And really, you need to look to wider assets such as stocks, such as gold, such as Bitcoin, that aren't getting eroded so easily and so impacted by the decisions of a couple of people. So
I think that's what I love about Bitcoin in particular, but cryptocurrencies is, it's actually seriously underestimated, that word decentralization.
Yeah.
To me, what it means is everyone has to play ball.
Yeah.
With the USA has had way too much power. They've literally bullied every country into what they want and what they need. With something like Bitcoin, Russia has to play ball. USA have to play ball. They can't just manipulate, print how they want to. Trade wars, this, trade wars, that. You're playing ball on a decentralized network and an asset that everyone has equal opportunity over. So
and just to touch on that, I guess that's why you see the Sailors and the BlackRocks of the world is they're trying to front run that idea. Like even Sailor came out recently. I did a news article on it last week, and he's been speaking to sovereign wealth funds of certain countries. We see Norway sovereign wealth fund, Qatar sovereign wealth fund, UAE. These countries are actually accumulating Bitcoin, or at least the ETFs of the Bitcoin, because they're hedging against themselves, just as you should. So yeah, definitely agree with that. Like it's just a moment in time where, even as an investor, let's just say you've got a very strict TradFi kind of thing. What do you have to lose to allocate 2% of your entire investing portfolio towards an asset that, even if you heavily don't believe in, you haven't read the white paper, so on and so forth, like that hedge is worth its weight in gold,
100%,
against not even your other investments, but your net worth that sits in AUD or USD. So
hey guys, real quick, if you've been wanting to earn passive Bitcoin without dealing with the headaches of watching the markets, you've got to check out Mining Store. We help investors buy and host Bitcoin miners in our professional grade facilities. No tech skills, no infrastructure costs, just passive Bitcoin straight to your wallet. If you're serious about building long-term crypto wealth, then hit the link below and book in a call with one of our experts. Now let's head back to the episode. More than ever, and particularly at Australian CryptoCon that we were just at recently, I felt like the people coming up to us, the people that we're having great conversation with, there was a jump of 10 levels, at least 10 levels of, their understanding of the market, their faith in the market. It wasn't these blokes coming up or these ladies coming up being like, yeah, I'm buying this altcoin, that. Like, there was a strong belief in Bitcoin and a want to capitalize on the altcoin market, but this strong belief in Bitcoin and just an understanding level.
Yeah, we actually haven't spoken about that. I think we both, we've spoken about it, but not on here, about how much better this year was compared to last year. And you mentioned before, right? Like when we were going to Australian CryptoCon last year, we'd gone from 70,000 to 99,000. Everyone was like, oh, we're going to hit $100,000 CryptoCon. And no one wanted your help at that event because everyone was rich, everyone was happy, everyone was making money. Everyone was an expert, right? So no one needed the experts to help out. Whereas this period was quite different. In the month of October, we mentioned October 10, a lot of these other events leading up to mid-November, Australian CryptoCon prices went from 126,000 down to as low as, I can't remember what the price, in the 90s, I think. Definitely at Australian CryptoCon. So everyone was more engaging and willing to have a discussion about what was happening with price, what was happening with macroeconomics, what is the outlook. No one really gave a shit about that last year. So that was, definitely something I noticed and I found way more impactful this year is people wanted to generally speak about the direction of the industry.
Well, it's an interesting one, whether it was that people have matured and understood more or like what you say, they just needed help more.
Yeah, I think it was an element of both.
It was a bit of both.
Like everyone in this market, and you'll notice it with your friend, everyone's an expert when prices are going up. Everyone is very, very scared.
Very
no
cocky.
one knows what's happening, and everyone wants to find out what's happening when prices are going down. So,
and then they go into hiding when it drops, and that's where the opportunity is, which is the sad thing. It drops.
Yeah, and I think this is where we should probably go back to what we see the outlook for it now, and it does tie in largely to macroeconomics, and it will be dictated by macroeconomics. One belief we have right now is that the cycle top isn't in, and there's no longer cycles. And for many of those that watch Raoul Pal, is that how you pronounce his name? I think it is.
Yeah, Raoul Pal.
He talks about the business cycle a lot, and you see how cyclically how much Bitcoin aligns with that business cycle, which doesn't relate to the Bitcoin cycles at all. And that business cycle is yet to really kick into gear, but we've just been following it to a T. That's one set of confluence you can look at. But yeah, moving forward, we believe that with rate cuts continuing into 2026, the Fed turned off quantitative tightening on December 1st, and they're now moving towards a more easing period. I won't call it QE because QE is actually, the physical buying back of government bonds and actually injecting physical hard liquidity into the system, which I don't think they've done yet. They are doing a number of cash injections in the billions to help out local and lower level banks, but I don't think we're at that level where, they're just printing cash and putting it into the system and buying the government bonds back. But really that's our main thesis moving into next year, is that we see, given the rate cutting regime is going to continue, this creates a more prosperous environment to invest in something like Bitcoin, because what happens with these large investors that hold government bonds is it's no longer favorable at 2%, at 1%. It was at 5% the last few years, but are they going to make more money potentially investing into something like Ethereum that they're able to stake and earn 5 to 6% yield on? And they can do that through the BlackRock ETF as recent as last week.
Yeah.
Or are they going to sit in government bonds at 1 to 2% yield? They're not.
Spot on.
So
and look, that takes us to where we're at in the economy now.
Yeah.
What we're looking at right now. What are the main things that are affecting Bitcoin's price? What are the main economic conditions that we're looking at?
Yeah.
And probably a really big one, which you kind of tapped on right now, is the new chair coming in on the Feds, right? So Trump's going to get his way, and we know he wants a lower interest rate environment. So we've recently had that rate drop. Do you know where we went down from?
We went from 3.75 to 3.5.
3.5, right. So not the 1% that we want or Trump wants, but
he wants sub one. So.
Yeah. So basically, that's one thing. We have had a rate drop. I think from your notes that I was reading, Jerome was basically saying that's what you're going to get. Don't expect further.
Well, he's just quite hawkish. Yeah.
He is.
And he's very data dependent, which is fair enough. And I think that's what's created a lot of the uncertainty and risk recently is we've had a lack of data because of the government shutdown. So then he's like,
Yeah.
But yeah, just to tie it back to what you said, Trump wants a lower rate environment. He's got it down to two people, which are both the Kevins. Kevin Hassett is the more favorable, very, very dovish. I will cut interest rates to below 1%. He's a BTC, I believe, and Coinbase stockholder. So for crypto, very bullish for us. So yeah, that's just one aspect.
Yeah. And look, it's a hard one because sometimes you want the market to do well, but it's the global, the global state in a position for lower interest rates and another pump and just make the situation worse.
And I think that's kind of what's the sticky point for us now is, okay, so they're cutting rates in the US not because inflation is at their 2% target. It's actually at 3%. It's a whole percentage, basis point higher. But due to stagflation, which is a result of the labor market deteriorating and unemployment going through the roof, they need to cut rates in order to service that. They don't just service inflation. That's one aspect. And so I think that's the sticky point moving forward. Like you said, it's like, well, great. Like, yes, we're getting rate cuts for our crypto, but my packet of Red Rock Deli chips at the supermarket's probably going to be double the price because inflation's going to go back up as a result of and I think that's the hardest thing, as I said, as an analyst looking forward for me is like, okay, the rate cuts are good, but this is going to create a situation where inflation goes higher and they're just going to have to end up
you're delaying the inevitable.
Reversing. And I think that's what everyone knows about the current state of the economy is, yes, the markets look good, but does the economy really deep down in your gut feel good? I don't think anyone can say yes.
Nah.
Like we're all experiencing the inflation personally. We're all experiencing
that's my
high
worry.
Interest rates.
That as well as like US debt. I'm seriously worried about it. Like honestly, it's one of those things. It is so complex. I don't honestly understand how it's gotten to where it is. And even the smartest people in the world, I listen to the Elon Musk, I listen to the Raoul Pauls, or whoever it may be, they are all seriously worried about it. And they don't think it can be fixed now. So that's the kind of black swan event that they're just pushing the can down kicking the can down the road.
No, I agree. So I think that's why it probably opens up a pretty decent door of like my outlook, and I got it wrong initially, is that I thought that this influx of QE, aggressive rate cuts, liquidity thrusts, and more would be the end of 2025, where it's now been kicked the can. You can't do much when the government shuts down for 2 months.
Sure.
Can't do anything when the data isn't released. And that's why we see the opportunity now. And I do believe we should, if we maintain, and look, for me, I'm a chartist, I'm a technical analyst. If we break below 74K Bitcoin, that would, to me, very simple in market structural terms on the monthly chart, represent a lower low. That was our previous major low. As long as we stay above that, I believe we can rally towards a new higher high. And I do believe this will be as a result of a macroeconomic environment that favors more money printing, more rate cutting, less people parked in government bonds, and they'll favor investments like Bitcoin, Ethereum, and altcoins. And once again, I do believe this should happen in Q1, Q2, 2026, and we can be wrong, right? But that's why, that's why. I think we said it on the other episode. I can't remember if it was the start of this one or the last one, but there's two iterations of investing. There's the bear market dollar cost averaging.
Yes.
That's why it's fine. We've taken decent profits on a lot of those positions. We've held Bitcoin from, as low as 15, 17,000. Ethereum, I remember we bought at $800. It's not the end of the world if we see slightly lower valuations. We'll probably cut a lot of those positions, take profits, reset for lower. If not, we're going to carry these investments much higher and actually use the opportunity that's presented with us now. I know you bought a bit of Tower recently.
Yep.
So did I. There's other investments that our clients are buying themselves based on our limit order and dollar cost averaging zones. And really, we're preparing ourselves, like you said, we're in the market. We're okay that we didn't get it right towards the end of this year because we're looking to get it right in Q1, Q2, 2026.
And that's it. Like it's, so if we kind of, like a good example of this is how we thought things were going to go over the previous 2 years, which we were talking about at the start of this episode, how they actually went. Well, we were still very profitable during that time. Even though a lot of people haven't been, we've been very profitable because we're willing to adapt and we're watching this 24/7. Skipping forward to where we were just talking about now, where things are at right now. Yes, we are bullish. Yes, we think the cycle continues. I saw CZ, he said on an interview recently that he believes that as well. So it's nice to see other leaders in the space kind of on that super cycle, an extended period mentality. But if that's not the case, that's okay. It just changes the way that you need to be positioning yourself in the market. Maybe you cut some losses, wait for things to settle a bit, build your DCA back like we did in Bitcoin, like we did in Solana, and then the fruits of it come when it tops out again. So
that's the important thing, is realizing that this is now a long-term investing game.
Yes, correct.
People come to us all the time, and as we've said numerous times, it's not like 2020 anymore, 2019, where you can plonk cash and have a punt and you're within a week you've done a 5x. No longer exists in this market. There's different marginal buyers, there's different investors, there's more fragmented and diluted liquidity across DeFi, across meme coins, across a billion different coins. And you need to have a strategic professional approach. So when we do get to these periods where macroeconomics do flash those really bullish signals, that you're already prepared, you've already dollar cost average, you're not chasing like everyone else and buying the news and then getting sold. Buying the rumor and then getting sold on the news. So on and so forth. And I think, with the outlook into next year, if you are preparing yourself now to dollar cost average into the right high conviction investments, you can do very well, not just because there's going to be rate cuts, but there's heaps of things. Trump's doing $2,000 stimulus checks. We spoke about COVID and how much this boosted risk on assets. And really, it's a liquidity game. Bitcoin is a barometer of liquidity. And if we see those macroeconomics continue to thrust liquidity and M2 into the system, the business cycle kicks up, rates come lower, and somehow they get inflation lower, then we're risk on.
Spot on.
I think the biggest risk to us is inflation heading higher, as we said, and it's just kicking the can down the road.
Spot on.
But once again, if you're invested, if you got time in the market, if you've got people helping you out how to approach dollar cost averaging, really, it's not as hard as what most people think.
And I think just on what you were saying there, in reflection, the big, I suppose, disease that crypto investors, particularly old crypto investors, face is that they're waiting for the big pump to happen.
Yeah.
And that's probably what's changed the most. Like it could happen. Bitcoin could, for whatever reason, go from 120 to 140 to 160. The tide rises, the ships will rise with the tide. And we see all these old coins. Okay, sure, it could happen, but don't be banking on it. That's not the way you should be investing. You shouldn't be just sitting there on these old bags and just waiting for that to praying for that to happen. You need to be smart in between it.
Yeah, 100%. And, like we've touched on how we ourselves have had to change our strategy in terms of how we see the market. We were those type of people early on in this cycle that And like, we don't blame ourselves or blame anyone. It's how the market used to occur. You can't just magically predict it structurally shifts, and that never happens anymore. But as we saw the writing on the wall, as we began to learn more about this new iteration of the market, we flipped our strategy from investing in 30, 40 coins to 5 to 10 high conviction, lower risk coins. I think that's my best piece of advice is moving forward when you're anticipating for the market to go up. I think you need to ask yourself this one question. If Bitcoin goes up and it is the main surge of the market, as it has been in every prior little pocket of this cycle, is do I have 100% conviction that this coin will go up? Because for 99% of coins, they won't. They'll go up, but by the time Bitcoin stops and chops for a bit, they'll be lower than what they were. That's like Sonic is an example. DOT is an example. All of these coins were higher valuations at the bottom of 2022.
And not financial advice, but, you know, does that, if your gut says they won't go up, do you cut your losses?
Yeah, you cut your losses. I don't think cut your losses, but if you're going to put more capital and risk in the market, begin at least looking at projects that are, and I think that's what
have that opportunity.
Yeah, and like, once again, ask yourself, who's the marginal buyer that will make the most of these macroeconomic conditions? Okay, well, bondholders, institutions, large traders are these people that buy these ETFs that will shift to these ETFs. Who has ETFs? Solana does, Dogecoin does, XRP does, Bitcoin does, Ethereum does. I think they're the only 5 at the moment. A few more will get them in coming months, but really ask yourself, okay, well, let's just use Sonic for an example. Will it rally as much as Solana on the next leg up? Probably not, because it doesn't have the people that are actually interested in investing.
Might have to shift our leftover bags into Solana after this podcast. Stick to our word.
Yeah, non-financial. And like, look, it's just one example, and Sonic could do a 10x from 10 cents to $1 again. But if you're strategically thinking about this iteration of the market, who has adopted it, who is investing in it, it's no longer the people that are looking at low cap coins. It's the people with a serious amount of money that are shifting out of other assets into those more high conviction, low risk coins, such as Bitcoin, Ethereum, and Solana. So
I like it. Look, that's good. Middle part. In terms of predicting, we don't like to do this. So like what's coming up in the next 2 years, just on our mind, personally, what I'm really, really interested in, and I think it can actually solve a lot of issues that we've talked about right now. It could be US debt, it could be inflation. The AI industry, it is seriously I'm walking down the street and I walk past a cafe and I guarantee you I'm going to hear people talking about AI, you know, the chat GPT, whatever it is, you know, these things that they're using. The thing that I really like about AI and crypto is, what currency does AI want to operate in? Do they want to, they can't go an AI, like literally think about AI as a person or an entity. Do they want to go and set up a bank account? Well, they can't. But they could easily set up an online store and operate in cryptocurrencies. So the opportunities, the projects that can launch when AI really starts to going in full force, maybe when crypto becomes the front and center of attention again, that's a very, very exciting thing for me, and something no doubt you're keeping your eyes on.
So like, it's autonomous agents, AI agents, they can go and trade, and you know, we've seen countless examples of this. And as you said, you know, everyone's got chat GPT in their pocket now. And really, I guess in terms of prediction, you can't, can you? Even 2 years ago, if we were sitting down doing this podcast in mid-2023, I don't even know if we had chat GPT then.
Not 2 years ago, just started.
I reckon 2 years ago it was just starting. So really, it's impossible to predict. But you know, you'd be silly as an investor, and non-financial advice, of course, to not, you know, give yourself a bit of exposure to AI projects within the cryptocurrency ecosystem, because it's kind of like that joke. I remember 5 years ago we used to say, if aliens come to Earth, what would they pick, the USD tokenomics or the Bitcoin tokenomics, or would they pick Bitcoin? We'd always joke, they take all our Bitcoin and use it as their own currency. And it's the same with AI, right? Like, I've seen people do this with Grok. If you do tweets on Twitter and you tag Grok, he'll reply instantly to you with his artificial intelligence. You ask him about Bitcoin versus the fiat system, and he'll absolutely tear the USD to shreds. And, and that's just him speaking of the knowledge he's gathering and scraping.
But you know, there's just the powerful people. That's where their interest is. But it's shifting every single year. It is shifting.
Yeah,
Like when we were sitting in Nashville and Donald Trump is at a Bitcoin conference, literally saying that he's going to do a reserve currency, or like strategic reserve. Like not in a million years, JFK's up there. He's a big believer in it.
Yeah.
Like the shift is happening, and the shift is happening very quickly. But yeah, as I say, like maybe I've been listening to too much Joe Rogan, getting the conspiracy mind going. But there's a lot of truth in it, and you need to think like that when you're looking at the next narratives in the next 2, 3, 4 years.
Yeah.
That's the thing that I'm going to be looking at is within crypto, there is going to be some big AI projects. I know we love Tau is one that I've recently dollar cost averaged into. But yeah, keeping my eye on that space.
Yeah, definitely. And I think it's just like the ultimate, and there's going to be runners, right, that you're going to get really lucky with. It's like kind of like the perfect convergence of speculation where crypto as a speculative asset meets AI, which is the most speculative thing on earth, right? And I think you'd be silly to kind of put a line through it and move on. What I see, I think it's going to have a massive run again. I think it had its speculative run where we had Fetch and Near and Tau and Grass and all these different speculative projects come to the market 2 years ago when AI was first introduced. And I think they outperformed everything, probably that and meme coins. I think they've had significant pullbacks and people got bored of it because natively in crypto, people hop from narrative to narrative. But I think there's going to be a major breakthrough that we can't predict.
Yes,
that'll
correct.
Be the convergence
It's not there yet.
Yeah, and there'll be the convergence and intersection of AI and crypto at one point in a year or two where there'll be this crazy breakthrough where like it could just be to do with the
when
chips
you message me in the morning and you go, the project is here. You know what I do?
It can extend to so many things, right? Like when we speak about the importance of NVIDIA and its chips, like they could develop this chip for a miner. Like, you know what I mean? There's just so many different angles you can look at where the intersection of machinery, AI, human intelligence and crypto are going to converge and something magical will happen.
And that's the thing with these conversations that we have about predicting the future, they have to be bizarre.
Yeah.
Because, like, it's kind of like ironic, or it's what we're saying is like, we hate it. Like people always ask, what should I buy now? And Mitch, what's going to happen in 6 months' time?
Yeah.
It's like, I don't have a crystal ball.
Nah.
You need to get your mentality that that's not how investing works. You don't want to be reactive to the point where you're too late.
Yeah.
You got to be a bit proactive and see things that are happening and, position yourself.
For sure.
But you can't just go, this is going to happen in 2 years. This is how I'm going to position myself. See you later. I don't need to look at the market.
Yeah, and I'll give a brief example, which is to do with, I guess, geopolitical or to do with politics is like, the privacy narrative right now. We recently invested into a privacy coin. And the reason I did that was I was forward looking to 2028. And I was looking at the midterms coming up for Trump and the Republicans and how it's actually looking quite poor for them. And like, we don't know, right? But there's every chance, like it feels like in America goes Democratic, Republican. It's the same as here, Labor, Liberal, yeah. And they're just the same two parties that have slightly different policies, but spill the same bullshit, right? And the way that I saw the privacy narrative and why I believe it has real legs is it does now. It might not next year. It might not in 2027. But I thought about it and I thought, what happens if Trump, Saylor, Larry Fink, they all stuff this up? And then Kamala gets into power or Democratic equivalent and they just put the task force straight back into the SEC. They ban Bitcoin completely. And the only really valuable utility type tokens in cryptocurrency are privacy ones that they're not able to actually get off you. Like that's just a forward-looking narrative that I'm willing to hedge and I'm willing to actually invest into and it might not. I might lose money. These privacy coins might go to zero, but you've got to have those crazy thoughts, like you said, where like someone might be watching this going, yeah, you an idiot, Trump's getting back in and crypto is you don't know that. Like I reckon.
I want to summarize what you said there because people can't miss out that point. Essentially what you're saying is with diversification, there are areas of the portfolio that you put into, and this is a privacy one. Some people might not see value, but there's a thesis behind it. And you're forward thinking in the sense that if that does play out, that's going to be a banger.
Of course, because there's two ways to invest in cryptocurrency narratives, right? It's joining in on the narrative and it's predicting the narrative.
Yes, spot on.
And the most amount of money you're going to make isn't joining a narrative late and playing the hot potato. It's actually going to be investing before everyone else comes with the demand for that token or for that token in that narrative. And yeah, like you said, it's all to do with forward strategic thinking. And it has to be crazy, right? Like the easiest example for me is to say to you, in 2020, when Donald Trump lost the election, if I turned to you and I said, in 4 years' time, he's going to be the very first US president to make a return from losing an election. He's going to win the election. He's going to get up and say, cryptocurrency is his most important policy. He's going to launch a meme coin for himself and his wife, and he's going to float a Bitcoin strategic reserve. I'd be laughed out of every room I ever bring that up in.
Unbelievable. Yeah. No, you're like perfectly summarized.
So that's why, you've got to have forward thinking of craziness, but at the same time, logical thesis, like
Spot
you said.
on. You
have a narrative and a thesis that you believe in with conviction, but yeah, you've got to have crazy outlooks in order to make money. So
that's it. Well, we've covered the past 2 years, what had happened. We've covered kind of what's happening now.
Yeah.
We've put our conspiracies, and I'd like to come back to this episode and see if something come through.
Yeah.
But yeah, for me, big on that. AI is what you got to watch. It's a saturated topic and a saturated market in senses.
Yeah.
But also, it is absolutely the way of the future. If we saw the .com era, if you saw, whatever it may be, Android, Apple, iPhone era coming out, these advancements in technology, AI is absolutely the area to watch. It's the watch your space area. You don't want to get sucked into the crap. There's going to be a lot of crap out there.
Already has been, yeah.
Yeah, spot on. There has been. But for me, that's really what I'm kind of yearning for. I'm looking for a really good AI project, which is here to stay. Something like Tau, but maybe even better. That doesn't exist yet.
Yeah, completely agree. I think as we've kind of noticed, noted, you'd just be silly not to have exposure to something that arguably should make complete sense with cryptocurrency. And like you said, like if you rewinded to 1999 and said, early 2000s, should you invest in Facebook or Google or whoever it was, at the time, it's risky and it's speculative, but it just makes sense. And I think AI is going at such a rapid rate that it's going to run all of our lives. It's going to run all of humanity. It's going to replace a lot of jobs. It's going to replace a lot of stuff in cryptocurrency.
Politics.
So, politics. Like it's just going to do crazy things we'll never imagine. So yeah, you've got to have some sort of speculative exposure to it. I'm actually really looking forward to seeing, when we get past that speculative stage, what it actually looks like. And going back to what you want to invest in is projects with utility, with real life use case. And that's AI, right? And once you notice one within crypto that has that, like, okay, this makes sense. This is actually going to apply to real people in the real world. That's when you want to jump. So
100%. Look, I think I'm very bullish on AI. Everyone understands the risk of it. What I will say is don't go and watch The Matrix.
Or The Terminator.
Or The Terminator. Potentially those ideas that put it, you know what, you got to be aware of those risks. But overall, I think just the way it's going to change the future over the next 10 years is massive. It'll be watch this space. I think that's everything on this episode, covered across, giving people things to think about, what we're kind of looking at. Anything that you want to recap on?
I think just for listeners at home, like if you've watched this, I feel like there will be a fair few that, what does he mean by bonds? What does he mean by interest rates? What the hell is fiscal policy? Like I see this stuff in the news all the time. It's either come and learn it. We've got an advanced investor course that goes exactly over all macroeconomics and how it not only applies to cryptocurrency, but to financial markets as well. But more importantly, like both Will and I, we actually studied economics at university. I have a degree in economics, finance, and accounting. So I did this for a living. Like I do this for a living. Yeah. And like most, I'd say, without being rude to them, most cryptocurrency analysts out there, they had it easy prior few cycles. They've got no understanding of this stuff, and it's why they've stuffed this cycle up. If you want to have someone that does deeply understand this, is able to relay what is happening at an interest rate decision, what a trade tariff means, what this deal means for NVIDIA, so on and so forth, how this will impact AI and crypto, please come on down and get the help you need.
So perfectly said. And like, take it, I don't like the word warning, but take it as a warning that you're not going to be successful in the markets going forward if you're just trying to throw money at altcoins and crap out there. So. And
never has there been a more time where macroeconomic, like take it from me that someone's been in this market for 10 years and then has been in it full time the last 5 years. There's never, ever, ever been a time where Bitcoin in particular, and as a result, altcoins are more sensitive to macroeconomic changes or events, which didn't used to be the case when, as we've said, interest rates were 0%. There was no such thing as tariff wars. There was no such thing as really geopolitical tensions between other countries. So there's never been a more important time to at least either learn and have a fundamental understanding of how these things impact your investments, or have someone relaying to you day in, day out how they do. So,
spot on. Well said, Mitchell. Until the next one.
Until the next one. Thank you, everyone.
Cheers.
Cheers.
Thanks for tuning in to Crypto Coach Will. If you got value from today's episode, then make sure to subscribe so you never miss the latest tips to navigate the crypto market. If you're ready to take crypto investing to the next level, check out the links below where you can book in a call with my team of experts. We place strong emphasis on educating before investing in the market, so take advantage of the knowledge they have to share. Don't forget to follow us on socials @CryptoCoachWill, and I'll catch you in the next episode.